It started with Evergrande and it's now deepening with Country Gardens. China's economic situation is deteriorating by the day, and no one seems to be talking about it. As the world's second largest economy, China has spent the last 30 years enjoying an economic miracle, with unmatched GDP growth propelling it from poor to rich in just one generation. Today, their economy is a major player on the world stage, responsible for manufacturing almost everything, and after a perfect 30-year stretch, the country is finally seeing some cracks develop. Remember earlier how Evergrande was causing the markets to panic? Well, now we have a new player that is headed down the same path. The resulting crisis could potentially wipe away this crazy bull run we've all been enjoying. Since taking the top spot from Evergrande Group in 2017, Country Garden has remained the largest developer in China by contracted sales. It employs more than 200,000 people and is arguably the biggest and most important real estate company in the Far East. This past week, it found itself struggling to stay afloat. Some of the Country Garden dollar notes plunged to record lows in the wake of a report that the firm failed to win sufficient investor support for a possible convertible bond deal. Longer dated bonds were trading as low as 69 cents on the dollar as of late Friday. News that made the stock plummet and lose investor support. This may sound boring and complex, but it's a big deal to world markets. Stephen Engel went on Bloomberg to summarize this ticking time bomb. Take a listen to his incredible analysis.
What's going on with Country Garden now?
Well, I mean, the warning signals definitely were raised late last week when it failed to really garner any demand for this $300 million, convertible bond. And as you rightfully said, this is one of the more financially viable, or long seen as the more financially viable developers. This has been the largest developer by contracted sales in China, overtaking Evergrande in 2017. So essentially the last 4 or 5 years, they've been number one. And like all the other developers that are in this liquidity crunch right now, they relied heavily on overseas credit markets to fund expansion. And what they've done, like Evergrande, is expanded into third and fourth tier cities. 60% of their contracted sales are from those lower tiered cities, and where the risks seem to be mounting at a faster pace than the more developed places like Shanghai and in Beijing.
But we don't need to hear from Stephen to understand just how big of a problem this is. You see, China's economy is very reliant on its real estate sector. Based on the trends observed, Chinese citizens tend to invest in real estate rather than stocks. That's just the culture there. Many prefer to have something tangible in the form of real property. The stock market is considered to be opportunistic and not advised for those who care to have their feet solidly planted. This has led to a massive demand for new apartments and houses. All over China, you see immense construction projects where developers are racing, trying to match this immense demand, and they're using massive amounts of debt to do so. Now, after more than a decade of speculation and real estate fever, the ground is finally beginning to shake. The strict federal government is cracking down on greed, and in turn, it's making these companies face reality. The fear is that they've gone too far, and soon a Lehman Brothers type collapse will follow, leading to a worldwide recession. Remember, in 2008, the US real estate market imploded and ruined economies around the world. The same fear is now hovering over China. Now the focus will be on debt payments and their upcoming liabilities. CG has the largest pool of outstanding dollar bonds among Chinese real estate developers, excluding previous defaulters like Evergrande. It has racked up a debt of $11.7 billion, and the next payment is due in a couple of weeks. This is going to be just one of many payments due this year. The bills will total over $1 billion. Any trouble paying back these debts will cause a serious ripple effect in the markets. But not everything is bad according to some. Various officials and economists have stated Xi and his associates interfering in the speculative fever is a good thing. They think that puncturing the bubble right now is healthy. And while there will be short-term pain, it's a necessary act to put China on the right road to success. After all, we all saw how speculation in the real estate sector can ruin an entire economy essentially overnight. So the million-dollar question, where is this all headed? Can the Chinese government slowly reform this sector, or will it implode in their face and cause a serious crisis? Stephen Engel elaborates on this exact topic. Take a listen.
So any trouble at Country Garden is going to reverberate across the economy and across society. So that's why this is a big concern.
So, Steve, what's the property sector going to look like in a few years?
That's the million-dollar question, isn't it? What is the end game of Xi Jinping? What is the end game as they take on big tech, as they take on these property developers and these multi-billion-dollar tycoons who have racked up huge amounts of debt to fund this expansion? I mean, just look at the video that we have of any developer, the wide expanse as far as the eye can see. These properties, are seen all across China. This is not just contained to Guangdong. A lot of these developers are based in Guangdong. Country Garden is Foshan-based. And others are based just across the border here, but it's all across China. And we've been putting this question to just about every economist that comes through our doors or across our screens, and they all have a similar, scenario. And let me just run through them very quickly. Hao Hong at BOCOM, he says, this transition will be long and painful. The transition, perhaps, of knocking these private developers and these over-indebted developers down to size and letting the state-owned enterprise, those with implicit guarantees, if you will, by the state banks and the like, they will be taking a bigger outsized role in the property sector. Ting Lu at Nomura, a slowdown is inevitable. The best we could expect is a relatively soft landing over the coming quarters. Iris Pang, I'll just wrap up here, ING. The outsized influence on the economy, as represented by the property sector, should fade out in 10 years and will be replaced by high-tech and green investments. Well, we'll have to see the scenario for high-tech as well, as that's under siege as well.
Without any doubt, whatever side you believe, the Chinese real estate sector does seem to be on shaky ground. How it will turn out will largely depend on the ability for these firms to make their payments. We could be witnessing the source of the next worldwide recession unraveling right before our eyes, or this could be nothing, just a bump in a long road to Chinese success. As always, thank you guys for watching. Please don't forget to hit that like and subscribe button if you enjoyed it. And if you have some time, check out my other channel linked in the description below. Finally, if you're on Twitter, don't forget to follow me on there as well. The link is also in the description.